And then I will share my screen and then start the, okay. So can you see my screen? Is everything good?
No,
Oh, nope.
we
Okay, let
still
me try
see
again.
you in the t-shirt.
Just my face. Sorry about that. Try again. Okay, how about that?
That looks promising.
Okay. Okay, now can you see my screen?
Absolutely.
Okay. So just real quick, you guys, my contact information is in the chat box. It's also right here. You can take your phone out, scan that cute little box there. It'll take you to my website. Jody Hitano will be ready to go as soon as all the DNS stuff happens. I've already put it in there, but it's not quite ready yet. So for now, just go to that website that you see. It's going to be the same website, but just, different address. But anyway, so go to that, take a look at it. You can forward that to your borrowers if you'd like. I'm sorry, your clients if you'd like. But anyway, take down my contact information and call me anytime. Okay, we'll get started. So today's agenda, I know it looks like a lot, but I won't keep you guys I'll make it as short as possible. I already talked about why the move to Rocket. I'm going to talk briefly about who is Rocket, who am I. If you haven't worked with me before, I see a couple of new names here or attendees here. Going to talk about the 2024 lending changes and how that can impact your business in a good way. Real estate agent co-branding, scripts for overcoming objections, mortgage service, mortgage products, and then we'll stop or end it with a Q&A. You ask anything you want. I'll stay on the call way past 1:30 if you need. Okay, so talked about that already. So who is Rocket Mortgage? So Rocket started as a small broker shop back in 1985. I think in Detroit. If Chris wants to, if that's wrong, she can let us know. But so they started as a small broker shop, and then now they've become the nation's largest lender, largest FHA lender. Um, Rocket's been ranked highest in the nation for client satisfaction from JD Power for 8 consecutive years. And we've had some challenging times, so customer service is key, and it's been difficult these past few years. For them to maintain that rating is really impressive. A+ rating with the Better Business Bureau, closed more than 6 million loans in 36 years. Lead sponsor for Build for Zero. It's a national effort to end homelessness for veterans in the United States. And Rocket's also deeply invested in the communities since, they've brought in local loan officers for the community to serve them better, but also volunteering more than 865,000 hours logged from Rocket employees since 2012. So those are all really great things. Just real quick on this, I'm not going to talk about every ism, but this is something unique that I've not seen anywhere else that I've been before. But I have seen this in action already in the short couple of weeks that I've been here. So Rocket has some core principles, 20 of them, that they live by, and they really do. My favorite out of this is yes before no. It's the very last one on the right. And the reason that is my favorite right now is because I've heard a lot of no's in the past 6 months, and I got over here and it's yes all the time. If they don't know how to figure something out, they're going to try. It's not a no first. And that's important, especially when we're talking about financing, mortgages, all of that. There can be unique and difficult situations. Some people have challenging, credit or challenging issues with assets or whatever. And instead of declining a loan, Rocket is going to either, help me figure out how to make it work. I'll talk in a minute about if there's some credit challenges, what Rocket has in place to help borrowers. It's not just well, you don't qualify now, go get your credit fixed and then we'll call us whenever you're ready. It's nothing like that. So the yes before no is very important to me, especially right now. Okay. As Chris mentioned, the executive loan officer position was created so that you guys have a main point of contact with Rocket Mortgage and a local point of contact. So I'm in your time zone. You've got my cell number. I've always said to you guys, and I'll say it again, later on, evenings and weekends are encouraged. That's when we do a lot of work, right? People are done with their jobs. Now they can focus on tasks, they can focus on documents that they need, they can listen to you fully about their contract and negotiations and all of that. You can bring me in anytime. I'm not some 800 number that you call and you'll get tossed around. You've got my cell number, my phone's with me all the time. You can always call me. Competitive pricing, I've already seen it. The rates are better here, but still competitive in the marketplace. They're going to be bringing in new products from time to time based on what we feel is needed and what we can do here. Um, Local area knowledge, of course, is important, especially for real estate agents, but it's also important for loan officers. I'm not licensed in every state. I focus on California, anywhere from up in Mendocino all the way down to San Diego if you need. I know a lot of you, or some of you at least, are in the Southern California. And I've got that same local knowledge that you have about the market and the unique market that we have in California. Um, Elevate your brand with Rocket Mortgage. Rocket is very well known. And when you co-brand with me, let's say we put up some flyers at Starbucks or somewhere, and we're talking, the flyer is talking about, hey, give us a call if you think you can't buy, maybe think again, something like that. They're not going to have to wonder, who is this lender? It's not some random place that they've never heard of. Very well known, especially with the high ratings of customer service level. You're not going to have to sell that to them at all. We're now local. I've already talked about this. So anyway, there's a cute picture of California. This actually is a flyer. If you look to the right here, this is a flyer that I created that I can stick up in different places as well. But there are some co-branding flyers that I would love to work with you guys on that we can stick up and that will also get the word out of who I am, who working with Rocket, and then also who you are. All of your contact information on there as well. Who am I? So for those of you that I have not worked with before, and I do see several names that I don't recognize, so I'm glad that you're here. Welcome. I've been in the real estate industry since 2003. I became a licensed realtor in Georgia, where I'm from, in 2003. And although I love the real estate industry, I didn't really like the real estate agent aspect of it. And so I kind of fell into being a loan officer assistant at Countrywide when I was hired there. That was back in 2006. I became a loan officer full time on my own in March of 2008. So a little while ago. I've been there. I've seen it all. The market crash that we went through back then, the financial meltdown, mortgage crisis. I worked through all of that. So this market we've just seen, high interest rates, things like that. To me, it's cake compared to what we went through way back when. So I've got that background. I'm not afraid of any challenge or any difficult situation. I've been in the Bay Area since 2015. I moved out here, met my wife, her family's out here. We moved out here, been out here about 8 years now, and I love it. I reside in Oakland, California. I'm licensed all over the state. So wherever you are, if you're in California, I can work with you. Response time is very important to me. I've been through the home buying process a few times, and unfortunately, you would think that mortgage loan officers are going to be responsive like constantly, right? Because we want to work with you, we want you to be happy, but a lot of times it doesn't happen. It didn't happen for me just a year and a half ago when I bought my house, and it was frustrating. But I am same day response with you guys. If you call me at 10 o'clock at night, I'm probably going to answer. If you don't want to talk, if it's too late and you want to text, send me a text. I'm probably going to answer that. I don't ever want anyone to go or try to go to bed at night worried about their transaction, whether it's you as the agent or your clients that you've referred me, the borrowers. I don't ever want that to happen. It's not fun. It's not a good experience. And most of the time, I can answer their question and put them at ease, and answer your question and put you at ease. If it's something I don't know, I will find out. I've got Chris as a really good support system as well. Evenings and weekends, I've already said I'm always available. That's when it's really high time for us. So don't ever hesitate to call me. If you've got a client that says, like, I work till 7, I'm not going to be home till 8, I can't deal with this till 9 o'clock. I'm awake. I'm up. I'm at my computer. I work from home. I can get down here in 30 seconds, and I will take that call. I put an application in a couple of months ago at 11 p.m. one night, and it was amazing. Lost it to rate though when I was at Loan Depot, unfortunately. Um, Consistent 5-star reviews. I'll When I get my website up here and I can figure out how to get my reviews posted, I will. But I've always had really great reviews from my clients, and they've enjoyed working with me and the high level service that I provide. So if we haven't worked together, would love to take a shot together and see how it works with us. Again, anytime you guys need, I'm available. Lending changes for 2024. What's the most important lending change? Loan limits have gone up. This happens every year, as you guys probably know. Fannie puts out higher loan limits based on the past year averaging prices and things like that. This year, what I was excited about it last year, but when we went over $1 million for the first time, we were $1,089,300. Fannie has gone up to, and these are high cost areas, of course, in Bay Area being predominantly one of them. They've gone up to $1,149,825. Now this is on a single family home, one unit, condo, townhouse, whatever, but just one unit. That's phenomenal. And here's why. I have talked with many people in the Bay Area that can't buy because they don't have 20% down, because whatever they're looking for is in the jumbo category, non-conforming category. Those loans typically require 10% down at minimum with mortgage insurance. A lot of lenders went to 20%. A lot of lenders, and Golden One was one of them, that went to 30% down for jumbo. I think they've gone back to 20, but still, it's significant. And it kept a lot of people from being able to buy because they simply didn't have the assets. On top of, not only do you need the down payment, now you need 12 months reserves, maybe 18 months reserves. And that became a challenge for a lot of people. And so they took a step back. If that's happened with you guys, and we're in this about 1.2-ish, even 1.25-ish category, or I'm sorry, not category, forgive me, purchase price area, and you had people that couldn't buy the last year or two or three, you should call them. Say, hey, now it's 5% down, right? Minimum 5% down, because this is a Fannie Mae loan. Example, a 1.2 purchase price, that's a $60,000 down payment. Most people that have 401ks, if you've got anything, significant balance in there, most 401ks will let you take out a $50,000 loan to buy a house, or just for, random, withdrawal for different reasons. But the one for the home, that if you can take a loan out, normally it's like a 15-year payback. You're paying yourself back the interest of the payment. It comes out of your paycheck, so you're not writing a check out. And then you're left with $10,000 that they've got to come up with. And in the Bay Area, that can be pretty easy to do. So keep that in mind. A $1.2 million purchase price, only $60,000 down. If someone has 10%, but they're like, well, I've got it in stock. Well, let's look at the option of maybe not having them cash out stock, creating a taxable event, have this big fat tax bill the next year, and let's leverage the loan amount, leverage the lender, right? That's a smart debt to have. Mortgage, home, student loans, you're advancing your career. Those things are smart debt to have. So let's leverage that. These loans usually don't require reserves. Now, I say that it's not for every single borrower. We run underwriting, and then Fannie Mae will spit out and say no reserves required, or maybe there's a credit score it's a little bit lower. They may want 1 or 2 months reserves, but it's not normally like 12 months or anything like jumbo loans have been in the past. And I didn't put this on here, my apologies, but I will tell you, if you don't know already, in addition to these lending changes with the loan amounts, Fannie Mae has also changed the down payment requirement for multifamily unit homes, 2 to 4 units. So duplex, tri, or quad, that's only 5% down now. If you were with me the last couple of years or 3 years that I've been doing these calls, I've talked about, you guys getting out there and trying to help your clients invest in real estate. And multifamily is always, a great investment, because you're getting, multiple rent paid to you, and you're building wealth without really, having to take too much money out of your pocket, cash flow wise. But the challenge with that is, if you didn't have 15% down, then you're going into an FHA loan for 3.5% down, and then you've got that big fat 1.75% mortgage insurance premium tacked onto the loan. For $1 million loan, that's 17,500. It's insane. So Fannie Mae has changed their down payment requirement for multifamily to 5%. Phenomenal. Look down here on this chart here, a 4-unit loan amount. Now, this is not purchase price, loan amount for a high cost area like we're in here. I can go up to 2.211,600 on a loan amount at a 95% loan to value. Phenomenal. So put that in your back pocket there. And when you're out talking with people, doing any presentations or anything at all, and you've got someone who says maybe they're first time home buyer, they want to buy a 2-unit. A lot of times, people want to do that. They feel like it's a good investment, and it is. 5% down. No, we don't have to go FHA. You can tell I'm a little bit excited about that because I think it's phenomenal. Oh, question, poll in the chat box, and I'll just ask it and then I'll go back to it later. But have you had any clients in the past year, going back to what I just spoke of, that weren't able to buy because they didn't have the minimum 10% down for jumbo? If they're in this range of 1.2, maybe 1.25, 1.275 ish. If you can just say yes or no in the chat box. I'm just curious. I tell you about these changes, but I'm curious if that is able to strike anything within you that you say, oh, I had someone, last year that didn't have the money, but hey, maybe now they do. Just let me know in the chat. Okay. Here's our mortgage rate predictions for 2024. Now, again, nobody has a crystal ball. And if they tell you it's going to happen, then they don't really know. I wouldn't probably listen to them. But the estimates are actually a lot closer now from MBA, which is the Mortgage Banker Association, Fannie Mae, and National Association of Realtors. Last January, when I did this call to talk about mortgage rate predictions for 2023, I could go back to that slide, but I believe that we had anything from 6% to 7.5%, wide range from various entities that were, making their predictions. You can see here that by the end of Q4 2024, hopefully we'll be in the mid to low sixes. And that's what the MBA, Fannie Mae, and the National Association of Realtors have projected. Right now, we're sitting at about the average 30-year. Now, this is nationwide, not specific Bay Area, not specific Southern California, but national average 30-year fixed, as I checked 2 days ago, was about 6.875, down a quarter-ish in cost from 7 1/8 end of last year. So we have seen an improvement in interest rates, but remember, they change every day, especially conforming loans. They do change every day. They can go up 1/8 of a point, they can go down 1/8, maybe a quarter, depends on really what's happening in the market. The reason we saw this improvement here recently is based on the market commentary and product updates. So jobless claims came in at 187,000. I said that this is this morning, but it's a couple days ago. And that's better than what was expected. And that's what we need to see and what we've needed to see for years to fight inflation. That's one of the biggest indicators, that few other things, but is people look at the jobless claims. When jobless claims are less, then that's better. So that helped improve our pricing. New builds decreased by 4.3% month over month from December of last year to November of last year to December of last year. We don't have January numbers yet. Building permits that indicate future new construction increased, and applications for single family home new builds rose to the strongest pace since May of 2022. Now that should give you guys some hope. You should be seeing the light at the end of the tunnel. Rates have come down, and we're seeing that new builds are rising. We have also had an influx of refinance applications because people took on a lot of debt over these last few years, and they're utilizing the equity in their homes to pay off that debt. Even though the interest rate's a little bit higher now than probably what they had before, it's still exponentially better than paying high interest credit cards or high interest personal loans, things like that. And it puts them in a better cash flow situation. So we've seen that as well. So this is good. I think it's good. This gives me some hope. We've all had the interest rate objection these last 2 years. It's been very difficult. People are stuck on wanting to wait till it goes back down to 3%, which is really probably not going to happen. And if it does, it's not going to happen anytime soon. So they're going to miss out on building equity while they wait for something that may or may not happen. So when you're talking with people about interest rates, share that with them. Co-branded marketing. So I've presented on this many times before, and you guys seem to love the flyers that I can prepare. These are the same quality, really great looking flyers. If you want me to come to an open house, give me a little heads up, maybe a week or so ahead of time, and I can prepare some flyers, bring them, stick them all over the place. I'm happy to go to coffee shops around the area before the open house and plaster them up for you. I'm your partner. I'm here in it with you to do whatever I can do to support your business. We've got program product flyers, the co-branded social media post. Um, that is something that in 2024 I want to get more into. I've started it some. And that was my goal last year, was to focus on social media, but I didn't get it quite to the level I wanted to because of course, I was at a different place last year, end of last year. But this year I'm going to focus on it quite a bit more. So if you're into social media posting and you want some lending content, give me a call. Okay, here's a couple of flyers here. I have more than 40 co-branded flyers that I can prepare for you guys. The one on the right, the mortgage rates, I look back through history. I think that's an important one to have. Now, it's this particular flyer is through 2022, so hopefully they'll have the through 2023 up here pretty soon. But this is a great one to plaster all over the place in your community, in your neighborhood, because it puts it into perspective a little bit more. Remember, the people that are coming into the market now are not. It's not the generations that bought back when interest rates were 18%, so that they look at a 7% and be like, "Oh, that's actually great. When I bought my house, it was 18." That's not really the market anymore. So we have to understand that the people that are coming into the market now, they've been in the world and heard, 4.5, 5% maybe, but mostly in the fours, and then of course the threes over these last few years because of COVID. So showing them this chart, it actually puts it in more perspective. Goes from 1980, so it's quite impressive to see that historically, even though we're a little bit higher right now, historically we're still much lower than we ever have been. So if you're interested in that flyer, let me know. Get your offer accepted flyer is really cool. If we give you the verified approval, which I'll talk about in a minute, if something happens and we can't close the loan, then we will pay the borrower $1,000. Okay. Local media reports. This is a cool feature that I can send. Oh, sorry, that I can send over to you guys. If you have someone who's kind of on the fence and they don't really know if they want to buy yet, and you're trying to convince them that if you can afford it, it's always a good time to buy. This is a cool feature that I can send over to you guys. Let me just click the link here. This is going to take me to basically what I've showed you here on the right. Okay, to here. So I can send this over to you, the link. It basically would give your client, and include this in your listing presentation if you want to as well, whatever listing, selling presentation, whatever it is you do when you interview with people to try to get them to sign up with you. This is great information. It gives from December 2022 to December 2023 what the median sold price is by bedroom count, by compared to nearby cities. I just picked San Jose because it's where a lot of you guys are from, Santa Clara County. How does it compare with other places? Housing supply, all of this really cool stuff that might help you get someone to swing to a yes, let's move forward, versus, oh, I don't really understand what's going on and it's doom and gloom. So anytime we can put data in front of people, it's always best. So if you're interested in this slide, let me know. Go back here where I was. See if I can do that. There. Can you see my screen still?
Yes, local market
Okay, there we go.
reports.
All right, I got it back. Thank you. Okay. Oh, this little QR code here. Chris, don't look. I created this because the QR code that that came with it was going to Detroit. So I created this one last night. I'm not sure if that's legal or not, but um, this would be something if I can get Rocket to be okay with it, or they can create one for me. You can stick this in a coffee shop, bookstore, wherever. People love to just do something super easy. Take your phone out. You guys can do it now. It should take you to the website. QR code to my website. I can put a QR code to yours on here if you like. But people seem to like that. Makes it easy. Okay. Overcoming objections. So I've got a few scripts here that can help give you guys some talking points. Even though rates are coming down a little bit, they're still, higher than what we've seen, and people are still on the fence, buying or selling. So if someone says, I can't afford to buy now that rates have gone up, is that true? Well, it can be, but it may not be. Affordability has always been an issue, especially here in the Bay Area. With interest rates going up, yes, that does impact someone's affordability as in regards to their purchasing power. But it doesn't mean that they can't purchase. It doesn't mean they won't qualify. Maybe the purchase price is a little bit lower than, they wanted it to be, but perhaps they can get a better purchase price on the loan or on the property if they buy now, even with a little bit higher interest rate, because then we can always refinance. I say always, but we still have to make sure that they qualify. One of the loans I'm really focused on a lot is a 30-year fixed, because we've seen what happens. And if you were in an ARM a few years ago, all that risk that you took to be in an ARM and you had to refinance here in these last couple of years, you lost all of that, right? We're not, maybe not all of it, but you probably lost a significant savings, because now you're paying a much higher rate, especially first time home buyers. I don't want to see them in ARMs. I want to see them in a 30-year fixed. If they, buy something now at 6.5%, and say 2 years from now we want to refinance them, but they've lost their job, or maybe they've had added to their family and one of them doesn't work now and they can't qualify with their income, they still have that same rate. They know what their payment is and they can budget for it without having to worry, what am I going to do in 3 or 4 more years when my arm's going to adjust, might have to sell the house and move, and that's a horrible thing. So as you guys are talking with your clients, if you can help me help them understand that a 30-year fix is going to really be the way to go for right now. I'll wait for prices to go down. Well, we all know that's not going to happen. Not in the Bay Area, not Southern California. It doesn't really happen like that. Um, with interest rates high and less buyers out there, there's less competition. But we all know when interest rates go back down and more people start entering the market to buy, that's going to drive prices up. So as a buyer, you're going to pay whatever you're going to pay for your house. Instead of focusing so much on the rate, the purchase price, let's focus on what would even mean to have a home of your own, that you can start building wealth. Maybe you're the first time in your family of someone buying a home. You're starting now to help bridge the generational wealth gap, that you can leave to your kids and their kids, and so on. So try to focus on that as well. The feeling about it, about having your own home that you can do your own thing with a set payment. Don't have to worry about rent going up. Don't have to worry about landlords selling the property and then you've got to be kicked out, change schools, all that kind of stuff. It's just a much more secure way to go. The bubble's going to burst. I'll wait till that happens. I've said it a million times. You guys have probably said it a million times. That's not what we've seen in the past. The mortgage meltdown, that was for so many different reasons, astronomically different than what we've seen in the past with our interest rates being up. That's driven by, COVID was the driver of rates going down, the economy, everything that kind of went south there. But then with inflation being up, that's what's driven interest rates to go up. The inflation, and I'll see if I can get to that slide real quick. If I didn't, I thought I put it in here. Maybe I didn't. I wanted to show you I didn't put it in here. My apologies. The historical, how mortgage rates are impacted historically with inflation being high. So I'll just tell you. So I believe since 1970, when this was started being tracked, anytime inflation was high and mortgage rates went up, when inflation gets back under control, mortgage rates go down. That's historically been the trend since the 70s. So is that likely to change this time? No, we're already seeing it. When we get really good numbers and inflation's coming down a little bit, the market reacts and our mortgage rates go down just a little bit. So we just need to keep on that trajectory. It's probably going to be a little bit of this coming year. They're talking about, reducing interest rates, of course, but not at the fast pace like we want to see it. I want to see it drop down right now, but it's not going to happen that way because then, that's not the right thing to do either for the long term. Bubble's not going to burst. You know, explain that to them. If you need help with it, pull me in. I keep getting outbid. It's disappointing. That happened to me a year and a half ago when I was shopping for a home. Found a few that I loved, bid, didn't get it, crushed. And I'm even in the industry. So how do we overcome that? We're competing with cash offers still. I think last stat I checked, cash was about 20-25% of purchase transactions. We're still competing with that. I'm going to give you later on in the presentation here how we can help compete with cash with your buyers. My finances have taken a hit. If someone says that, that's a great time to say, well, let me have you talk with Jody. She's a mortgage loan officer. She knows more about this. Well, you don't have to say I know more about it, but on the financial side, I might have more experience with that. Let's talk to her and see what your financial outlook really is, and then I'm going to take a look at all their assets and I'm going to kind of figure out, what is the best way forward for them. And maybe they can't buy yet, but we can also come up with a plan of if not now, when? If not in January, well, if you do this, this, and this by June, you should have this, this, and this, and you should be in a better situation. Things like that. I'm not just a loan officer, guys. I worked predominantly in the banking industry for the majority of my career, so I have a lot of that background, especially with financial planning and financial services. Of course, I'm not a licensed financial advisor, and I never would pretend to be, but I do have that background, so I am able to analyze financial statements and help people minimize taxable events and utilize lender money as opposed to their own, leveraging what I can give them in a loan versus them paying cash or even cashing out stocks. So I did this last year. I'm going to start it again on February 13th. I've got some training that I'm going to be away from, so that's why I'm going to wait till February. But on February 13th, I'm going to start back up my 10 at 10 on Tuesdays. What is that? That is a 10-minute call. I'm not going to be as long-winded as I am on these calls. 10 minutes, I'm going to give you a quick market update, what happened over the weekend, if anything significant in the real estate industry, in the mortgage industry, what happened last week, what do we think is going to happen this week, give you some lending updates, and then I'll be available for Q&A. So you guys have a difficult situation, or maybe you had someone decline, hop on this call, and then at the end we can talk about it. Or we can just kind of have some synergy with each other and give advice and maybe challenges and things like that. Rocket also gives out a weekly newsletter. I'll get all that sent out to you guys. Monthly market and economic updates. I'll be presenting on that as well. Mortgage industry developments and professional tips. That will be on my 10 at 10 on Tuesdays. Okay, mortgage services. So this is probably, in my opinion, one of the best things so far that I've seen at Rocket, and I really like it, and so far my clients love it. So they do a verified approval letter. In the past, I've done a pre-approval letter, only if the borrower situation, maybe they're self-employed or they own a lot of businesses or they've got a ton of real estate assets and, maybe taxes are a bit complicated. I would send that into underwriting. Wait 3 to 5 days. Monica, if you're on this call, the last place I was at, it was weeks that I could to get an answer. But Rocket will do a verified approval letter, income verified, assets verified, credit verified. If you give that loan to me at 7 p.m. and I have everything in and it's ready to go, documents and that kind of thing, I'm going to have it out most likely by 9 a.m. the next business day. When you're talking about competing and needing quick responses, you cannot get faster than that. How they do it beats me. I don't know if somebody magical is working in the middle of the night, but they do it, and I've seen it done. This is the best way that we can compete with cash offers. Typically, cash offers, they're going to probably offer a little bit less on a purchase price, but if you can position it to the seller's agent, hey, go with mine. We're verified. We basically have cash. Yes, we need an appraisal. Yeah, we need home insurance. Well, any cash buyer, unless they just have a super high appetite for risk, they're probably going to want to know what the property's worth. Maybe they'll look at your CMA, but if having an appraisal is really the only thing that we is going to hold us up from a quick 10-day close, but if that's going to net the seller a lot more money because they're taking an offer that's got a verified approval letter with a higher purchase price, it might be worth it. So utilize this with me anytime. If you give me a loan on Saturday, I'm going to have it out. I would think by over the weekend, I would think by Tuesday, because remember, it's business day. And I'm happy to take the loan. If it's not a complicated loan, it's super easy, base employment, no overtime, bonus commission that we got to worry about, nothing unique, gap of employment, nothing kind of funky. And it's super easy, W-2 employee, base employment, the ratios are fine, credit's great, assets are theirs, it's already in verified. I probably wouldn't need to put them through a verified approval letter, but if you want that to be done, don't even ask twice. Consider it done.
Hey, Jody, can I piggyback on
Yes,
that?
you sure can.
So I've used the verified approval several times. And just to let you know that they do work on Saturday. I have had the verified approval back to me within 45 minutes, at the most 2 hours on the weekend. Yeah, so they do come in. I mean, they realize if you're working, we're working. And let me tell you, that verified approval letter has beat out more contracts and more, offers just by calling the listing agent and going through it with them and letting the listing agent know this isn't just put into a computer. This is a live person looking at the file, looking at all the documentation and signing off on it. So it really does work, and you really can close in 10 days, and you really do get your approval in 2 hours.
Well, there you have it. So
yeah.
we do have magical people working. Thank you, Chris. That's awesome. I wasn't quite sure how that worked over the weekends, but yeah, you guys, we're working on weekends as well. Again, evenings and weekends, that's the high time when people are available, and that's when we have to be available. So keep that in mind. That's awesome. Thank you, Chris. Another thing that I can do here that I like a lot is a soft credit pull. People are very protective of their credit, and they should be, because it's what they base their debt off of, their interest rates and things like that. So a lot of times, if someone wants to find out what their buying power is, but they don't want to take a hit to the credit, or they've talked to several other lenders that have pulled credit and they don't want to have another hit, I can do a soft credit pull. It's good for 90 days. This is conventional loans only. If I do the soft pull and realize we need to go FHA, or if this is a veteran situation, it's going to be a hard pull, but that is what it is. That's required for government loans. What's nice about this is it eliminates multiple calls from other lenders calling your client. The bureaus sell that information. So when you get this credit pull, so if I pulled your credit, hard pull, Rocket Mortgage, there are other lenders out there that buy this information, and they're going to call you, and it happens, and it's frustrating. And I have lost deals over it. Not many, but I have. When the other places I've worked at, they didn't offer this. Actually, Loan Depot was the only place that I have ever been at that offered a soft credit pull. So the fact that Rocket offers it as well is phenomenal. The only time I've got to do a hard pull is when we have a contract we've got to go into. Now this is a real live deal. We're going to go into closing soon. We've got to have the hard credit pull. This allows me to help a lot more clients because they don't have that objection to having their credit pulled. I've had people ask me, "Oh, can I send you my credit report? I just pulled it." No, I cannot take a third party credit pull, no matter who it's from. I do have to have it in my system so that when I run underwriting, it's reviewing that system, and we know that's a valid credit report. It's not anything that's been altered or anything like that. So soft credit pull. When you're talking with someone, they're like, "Well, I want to get pre-approved, but I don't want my credit to be pulled so many times." Hey, let me have you call Jody over at Rocket. She does a soft pull. It doesn't even impact your score at all. It's just gathering some information so that she can run your approval and purchasing power. Let me have you give her a call, or call me right then, and I'll pick up the phone. Okay, so earlier I mentioned if I pull credit on someone and there's some challenges, can't quite get it done right now, Rocket offers what's called a credit upgrade. It's a program that's designed to help them qualify for a mortgage at some point. It's a complimentary access to credit upgrade consultant that's going to work directly with that with your client to help them figure out, okay, this is what's happening, this is what's holding you back, here's what you need to do, here's what we can anticipate time wise, how long it might take. We don't ever want to tell someone no before yes, right? That's what I love so much about Rocket. I've not ever been anywhere where they have this. That's always fallen on me to do. And so I have to give people advice, and I have to be very careful of that because I don't have any kind of certifications, with that kind of stuff. And I don't want to, ever give anyone bad advice. So having a team that is professional, that knows the ins and outs of credit and how to help someone improve their situation is phenomenal. This is free to them. Unless it's not, Chris, you can let me know, but it's complimentary. So I believe that means there's no cost.
There is no cost. No.
Okay, perfect. Thank you. Go back the last few years and all of your calls, all the clients you've worked with that didn't close. If they didn't close because of a credit issue, call them. Call them today and say, hey, did you ever buy a house? No, I'm a credit this. Let's talk with Jody over at Rocket. She's got, and this is a free service for you. If you go outside and hire a credit help company, they're going to charge you a couple $100 usually at the minimum a month until your situation's better. This is complimentary. It's not going to cost you anything. And once you get approved, then you can stay right there with Rocket Mortgage and follow through the process. Call those people. Rate Shield. Now, this isn't going to be the most popular right now just because of the interest rate environment, but if it's a new construction type deal or someone that is maybe on the verge of not qualifying for ratios and we can't afford to have an interest rate increase, and that could still happen, even though the trend is coming down, they could still go up a little bit. Then we do have a 90-day rate shield. So we can lock them in that interest rate for 90 days. So we know that whenever they get a contract, that's going to be the rate. We don't have to worry about anything changing on the payment. Don't have to worry about a potential DTI issue. It secures their buying power. If the rates go up, they're protected. If they go down, they actually benefit. We can do a one-time float down to whatever the better rate is. Now there's some, I didn't put the asterisks on here, but of course there's going to be some qualifying things for this, and it's not, just like whatever, it can be whatever. There is a little bit of cost associated with it, but again, if it's something where we're kind of on the verge, it might be worth it to take advantage of that. We have it, it's offered. Bank points. So this is really cool because this can help one of your clients directly lessen their cash to close. So Rocket Rewards has this program. They can sign up and do some different little classes, little seminar things that they can do online, and they're getting points each time they do. And in this little example here, this is 12,500 points. You can see on the right all these little things that little articles they read and little classes they take. It's not anything that's super time consuming. And then this will equate to $125 in closing cost credit. The more you get rewarded, the more money you save. You can get that on up to almost pay for your appraisal. And they get 7,500 bonus points just for joining. So if you guys are interested in that, which I think you should be, and I think it's something that when we work together, I think every single borrower that we talk or that I talk with of yours, I think that we should sign them up for this. It's free money and it's educational. They're learning a lot about what it means to even be a homeowner. Ooh, time. Okay. Mortgage products. I don't have much time left. Sorry. Temporary buy downs. I've talked about these before. We have them at Rocket. Those are phenomenal to use right now, especially with the interest rate environment we're in. Say 6.5 or so, 6.625-ish, if that's the interest rate. Like a 3-2 or a 2-1 buy down seems to be the most popular. They're going to get 2% better interest rate for the first year. So instead of say 6.5%, they're actually going to pay interest rate 4.5%. Then the second year, 5.5%, and then it goes to the standard interest rate. But most likely, as long as they keep their credit good and they're making their payments on time and can still qualify, we'll refinance them probably within a couple of years. If there's any money left over that wasn't used for this temporary buy down then it comes back to them as a form of principal reduction on their payoff when we refinance them, or if they sell in that time period. And that's great because that means that, you know, the cost to do it, it's not wasted. If we do a permanent buy down and you refinance, say, a year later, whatever you spent, that's gone. And if you ended up not saving as much because you refinanced quickly, then that money is just wasted. So temporary buy downs are super popular. Seller can pay for it. Agent can pay for it if you want to. I'm not suggesting that you go into that first thing, but it's there if you need it to help negotiate. It's eligible for government loans, Fannie, Freddie, VA, as well as second home purchases, primary as well, of course. Trying to hurry up. Purchase Plus. This is only if you're in Riverside, Ontario, or San Bernardino. We can go up to $7,500 in closing cost credit. First-time home buyers. It's got some added affordability and flexibility with pricing, but only for Riverside, Ontario, San Bernardino. This is a Fannie Mae product, so it's not like Rocket saying, "Well, we're only going to offer it here." It's a Fannie Mae thing. So if you are an agent in those areas, give me a call or send me an email after, and let's talk about how we can utilize this to help grow your business. Manufactured homes. It's been a while since I've been able to do them. I still get calls from time to time. We can do VA and FHA financing on manufactured homes as long as they've been constructed after June 15th of 1976, and they conform to HUD codes and standards. I can get into all that later, but we don't need to take the time now. But just keep that in the back of your mind. Condos and co-ops. I've never been able to do co-ops before, so I'm super excited. I lost a deal last year to another lender because it was a co-op, and I was heartbroken. I'd worked with them for 6 months, but they went for a co-op, and I couldn't do it. So I'm able to do co-ops now. If you guys have any of that going on. New construction, buy down. I've already talked about that. Trying to hurry up here. FHA loans, you already know what FHA is, VA. I mean, if you don't, give me a call. I'm happy to talk about it, but I'm just letting you know what all I have here. It's really some of the standard stuff. And then one thing that I will mention real quick is that I have a bank statement loan for self-employed borrowers. So if they can't qualify on tax returns, don't look at tax returns, do not upload them, don't want to see them ever, we can take bank statements and derive some income from that. So if you got self-employed borrowers that didn't qualify for the last few years, give them a call. Jumbo, up to $2.5 million on the loan amount, 10% down with no MI. If you don't, we got to sell this one because this is huge. 10% down with no MI, and we can do cash out on second home and investment property. I have never been able to do investment property jumbo anywhere because the loan amount max was always so low and it just didn't work. So I can do that now. If you've got anybody that maybe wants to pull some cash out to buy another property, then that's a good thing, and I can help them with that. Okay, we don't really have time for this now because I've gone over. But if you guys would just take a quick moment, if you want to put it in the chat or email me the answers to a couple of these questions, I would be forever grateful. What challenges do you have that you think I can help you solve? Do you have any clients with a unique situation that couldn't be approved somewhere else or that wasn't before? Remember credit, maybe self-employed borrowers that I can help with? Let's talk about it. And what is one thing that you think can massively improve how you conduct business, and how can I help you with that? If you'll put it in the chat box, wonderful. If not, and you want to email me separately, then that's fine as well. Thank you so much. I know I've gone over quite a bit. Mike, I'll take a quick peek at the chat box here and see if there's any questions I can answer now.
I've been answering some of your questions for you.
Oh, you have? Oh, cool. Thank you.
Save you time. Yeah.
Oh, thank you. Thank you. Okay.
Yeah. It occurs to me that those list of products that we didn't have a chance to discuss, like VA, FHA, co-ops are pretty much San Francisco. That's about it. But we got people in San Francisco. That might be its own segment because FHA and VA takes more. I mean, it's not you have 5 minutes.
Right. Yeah. I'm happy to sign me up.
Right.
Tuesday.
And are there any questions from the group? You can unmute yourself and shout.
Let's see if I had.
All right, so those of you that are in my, on my team know that I've been working with Jody for a long time, back in the day, I think 2015, 2016, something like that. It's been a long time. All right, and so it doesn't matter really if which lender she's at. And that's because there's a lot of value in having a loan agent who knows what they're doing, has experience and service, because if you don't get the deal, then it doesn't matter what the rate is, right? You understand? There's other things that you just need to have good, clean answers to so that you know what to do. And so that's why if you're on the team and you do have somebody who is interested in buying or investing and they need financing, Jody's the place to start with. So I'm just throwing that out there. And
Thank you, Mike. I would piggyback on that, I also I don't like to be thought of as just a mortgage loan officer. And then when they close, that's it. We don't ever talk again. And I don't follow up with them, see how things are going. I have people all the time calling me. I had one call a few months ago crying because they lost their job. They're afraid they're going to lose their house. And I was able to help them kind of figure something out there. But one thing that I think sets me apart from a lot of different people is that I am always trying to figure out how to help somebody get in a better position financially. One quick example, I closed a purchase for a couple back in 2018. Their interest rate was 4.5%. It was a $1.5 million loan. When interest rates plummeted in 2020 in March, I called them. They are not financial people. They don't watch the news. They don't pay attention to anything. I called them and I said, hey, I can get you from 4.5 to 3. No points. It will save you. It's like $1,700 a month. They had no idea that rates had gone down. I guess kind of like, head in the sand, but I was able to get them refinanced and save them what, $1,700 a month. That's almost $20,000 a year over year. That's significant. And I'm not saying that no one else would have called, but I did, and I called, and I helped them get into a better position financially. And that is what drives me. That is ultimately what I want to do, and what brings me value and joy, and makes me feel like a contributing member of society when I can help people that way. And I will do that. I commit to do that for you and your clients as well. Okay, I know I keep talking, but.
well, I've spoken on your behalf that you're not licensed in Pennsylvania.
Right. I'm not. Palo Alto.
Well, Palo Alto, yeah. When I hear
Yes.
PA, I was like, yeah, I'll speak to that.
Santosh, if you need somebody in Pennsylvania, I'm sure Chris can probably help find someone over there.
Yeah, we can refer it out to
Yeah.
a local agent.
Okay, cool. Yep.
All right.
Santosh, if you'll email me separately, that'd be great. And then I'll get you over with Chris.
All right. Cool. Are we done? Everybody happy? I'm
Cool.
happy.
All right. Call me anytime, guys.
All right.
Let's make 2024 the best year yet.
Thank you.
Thank you very much.
Thank you so much.
Bye. Thank you.
Thank you,
Nice to meet
Jody.
you.
Thank you.
Was there a question?
Thank you. Bye.
Bye-bye.
Bye-bye.
Bye.